Hello everyone. Do you know that most salaried employees in India are paying tax more than what they should? Yes, I'm a chartered accountant and every year I see many people losing 20k, 50k and around 1 lakh also just because they don't know a few simple tax saving techniques which are known as strategies. In today's video, I'm going to show you step by step exactly how to save maximum tax possible on your salary in 2025. Simply, clearly, in plain English, and especially without any fee. Yeah, so if you are a salaried employee, this video is for you. And specifically, please stay till the end because at the end I'll share one tip that most people completely miss. Yeah, myself Boona, I'm a chartered accountant with around 4 years of experience in finance, taxation, and accounting. On this channel, I simplify tax and finance knowledge to you in very plain English so that you could understand and can make better decisions. If you are new here, welcome to you all and please subscribe to my channel because I post videos like this every day. Alright, let's get started. Thank you. Yes, the first thing is before thinking of saving tax on your salary, the first thing you need to understand is what your salary is made up of. Yes, you can know this by watching your payslip, by analyzing your payslip of any month. Your salary mainly consists of three parts. The first thing is basic salary. You could find all these categories on your payslip, no worries. So if you could see your payslip, you will find these all things. The first thing is basic pay. That's a basic salary. This is the core part of your salary. This is fully taxable. And the next part is the allowances, like the house rent allowances, travel allowance, special allowance, etc. There are many types of allowances. Some are fully taxable, or some are fully exempt, some are fully or partially exempt from your tax. Some are, and the next is perquisites. These are the benefits given by your organization to an employee, like a car, a computer, a phone, or a laptop. Yes, these can be structured to legally reduce your tax. Yes, and one more tip is you can talk to your HR, right? Just to restructure your salary means without changing your CTC and in your enhanced salary you can save around 10,000 to 30,000, in which most employees never ask. So just try asking. This is a simple thing without any change in your enhanced salary and also the cost to the company. And let us discuss now the benefits that are provided in the income tax provisions, mainly for salaried employees. Yeah, the first tax saving is known as standard deduction. This is automatic. You need not do anything to claim this deduction. Every salaried employee gets a standard deduction of 50,000 per year directly from their taxable income. For this to claim, you need not have any investments, particular investments, or you need not have any proof. If you have opted for a new tax regime, then the deduction is much higher, which is 75,000 rupees. Yes, for example, if your salary is 18 lakh, then your taxable income would be minus 50,000. 17 lakh 50,000 would be your taxable income. This is the standard deduction which is automatically can be claimed by all salaried employees. No investment or proof needed. Yes, and the another thing is under new tax regime you can claim around 75,000. Yes. The next thing is section 80C deductions. These deductions are nothing but means these can be deductible, means these reduce your taxable income, means the income on which you pay tax, it gets reduced, means so that your tax amount computation gets reduced just because of these deductions. And the most famous thing is section 80C deduction. You can save maximum up to 1.5 lakhs. Yes, so let's discuss on this. There are few points like the EPF, that is the Employee Provident Fund, public provident fund, equity linked savings scheme, LIC or term insurance premiums. If you have any home loan, you will also pay principal and interest on it. The principal portion you can claim as deduction. If you have any children, their tuition fees you can also claim as deduction. The first thing we shall discuss is the employee provident fund. For example, if you are a salaried employee, a portion of your salary gets automatically deducted every month. This can also be found on your pay slip. You can find this on your pay slip. The amount of deduction, the amount that is automatically deducted from your salary every month, and it gets deposited into your EPF account. It's saved there. For example, if your basic pay, let it be 50,000, and the employee EPF contribution is around 12%, for example, that is 6,000 per month. So annually your EPF contribution is around 72,000 per annum. This 72,000, for example, if this is your annual contribution, this is part of this 1.5 lakhs. Means 80C deduction, it's not a single deductions, like each deduction you will get 1.5 lakhs. It's not like that. All these at a maximum you can claim around 1.5 lakhs. You will get a clarity within a minute. Please stay. The next thing is the public provident fund. This is government backed savings scheme, safe investment, government guarantee, interest is tax free especially. It's also eligible for deduction under section 80C. Means if you have invested around 50,000 per annum in this public provident fund, then you would have got some interest at the end of the year. That interest is tax free, and the investment of 50,000 which you have made in this year, it's eligible for deduction. Means you can reduce it from your taxable income. Reduce your taxable income, that's the total income on which tax is computed, so that your tax automatically gets reduced. This is best for people who want safety and guaranteed returns. Check the lock-in periods, it's around 15 years I think. And the next thing is equity linked savings scheme. This is nothing but your money gets invested in the stock market through mutual funds. Yeah, these are also eligible here for deduction. Returns are not guaranteed here, but here it is guaranteed, but here it may not be guaranteed because the investment may grow significantly over time and the markets perform well, and it is the highest potential return among 80C options. Check that returns are not guaranteed once again. Young investors with a long-term investment horizon who can invest for long term and it is best for them. And the LIC, everyone pays LIC premium nowadays. It's a safety and secure thing. If you might pay a LIC premium or a term insurance premium, these can be claimed under the section 80C. Term insurance, it's generally considered to be better for protection because it provides higher life cover at a lower cost. Make sure that you do not throw away your LIC premium pay slips, means the receipts, because these are useful to claim your deduction. And the next most important thing is home loan. We know that Indians, we strive, middle class people, they thrive to build a house. Yes, government is also encouraging building houses or buying them because everyone gets shelter, right? Their own shelter. It is means every middle class people, once he gets a job, he dreams of building a house, but he needs a home loan for that. Yes, there is a bit encouragement here by the principal portion, whatever installment you pay per month, all those installments, what is the principal portion, take that principal portion you can claim as deduction. Yes, the maximum is 1.5 lakhs for all this. Okay. Yes, coming. The interest portion is claimed separately. If as you know, the installment carries interest as well. for the interest, the deduction is not available here. Under this section, it's not available. We'll discuss it later. Most people think that their entire EMI, the entire installment, including principal and interest, qualifies for the 80C, but it doesn't qualify. And the next thing is children education. That is a tuition fees. It's for maximum 2 children. That's only tuition fees, no more not hostel fees or books fees or uniform fees. They don't qualify. Yes, the next thing is, yes, maximum ATC deduction is 1,50,000 per year. Means all these come under section 80C only. So the maximum deduction including all this is 1,50,000. It's not like for home loan interest 1,50,000, for tuition fees 1,50,000, for PPF 1,50,000, for EPF. It's not like that. Everything, the summation of all this is equal to 1,50,000. This is the most thing which people miss. Yes, most salaried employees. So the tip would be like most salaried employees already have their EPF account. It's mandatory, right? Everyone has EPF deductions on their salary slips. So check. So the wise decision would be check how much of the 1.5 lakh limit is already used and fill the remaining gap with PPF or home loan principal or ELSS or LIC, so that you can save your tax. You can claim this deduction. Next, the most thing which people miss is the house rent allowance. This is nothing but if you are living in a rented house, this is for you. This is a house rent allowance. Means company will, the organization in which you work, they will pay you an allowance for house rent. This house rent allowance is also eligible for deduction. Means whatever you receive from your company, whatever amount is received, whatever HRA amount is received from your company is not taxable, not fully taxable. There are some exemptions. Yes, how to calculate? You can calculate yourself by following this very simple 3-step thing. So the first thing would be, what is the actual HRA received from your employer? Again, you can check this on your payslip. It's very clearly mentioned there. First check what's the payslip you have received, what's the HRA amount the company has given you. Then what you have to do is, you have to calculate the actual rent paid, okay, per month. For example, per month, whatever rent you have paid, minus 10% of your basic pay. Again, basic pay means at the beginning we have learned, right? The salary is divided into basic, this basic pay. This one you can clearly see in your pay slip. So calculate 10% of it and reduce it from the actual rent whatever you have paid. Now the third step is, you have the basic salary, right? So calculate 50% of it if you are in metro city, or 40% of it if you are in non-metro. Most of the corporates are in metro cities. You can see this 50% is most useful. Yeah. Now for example, if you can take an example here, I'll erase this for some time. For example, the actual HRA you have received is like 10,000 per month. Okay, you have received 1,20,000, right? Whatever rent you have paid is 15,000 per month. Okay, per month. Okay, basic salary, say your basic pay is 30,000. 10% of your basic pay is 3,000. So 15,000 minus 3,000 is nothing but 12,000 per month. 12 months. How much? Sorry. 1,44,000. The third thing is 50% of your basic pay. If you are considered to be metro, into 30,000 per month. How much is this? 15,000 into 12. How it would be? Yes. So whichever is lower. Which is lower here? 1,20,000 or 1,40,000? 1,20,000 is lower. So whatever you have received is eligible for deduction. Yes. Here it's eligible. Sometimes you might be paying lower rent. Then this will be lower. Then whatever rent paid minus 10%, it would be a least option. Then it would be that. So under this example, it's 1,20,000. So whatever documents you need is the rent receipts, the rental agreement, landlord's PAN is required if rent is more than 1 lakh per annum. Yes, right? Hope you have all understood till here. Please make sure you have the rent receipts and rental agreement, and also your landowner's PAN number if rent is more than 1 lakh per annum. You can get it. The next most important thing is health insurance deduction. Health insurance has become very prominent in today's world. Everyone is taking health insurance because prevention is better than cure, not only in health but also in wealth. Yes, the thing you can, the amount of deduction you could get under this section would be self, means you, your spouse, means your husband or your wife and your children, collectively 25,000. Collectively means all the three people, children can be 1 or 2 or how many. 25,000 is the maximum thing you can claim as deduction under this per annum. Okay, plus this is plus. This is additionally, if you are paying health insurance premium for your parents, then additionally you could get 25,000. If they are senior citizens, means 60 plus, you could get 50,000. Means 25,000 plus 25,000 or 25,000 plus 50,000, right? So total maximum deduction you could get under this section is 25,000 plus 50,000, 75,000 per year, or else 25,000 plus 25,000, 50,000 per year. Minimum is 25, maximum is 25,000. If you already pay for your parents, then it would go to 50,000, it would go to 75,000. And another thing is keep premium receipts safer, because they act as proof at the time of filing your income tax return. So potentially you can save up to 75,000, right? And the next, yes, I think we are reaching the end. Yeah. Yes, I promised you, right, at the beginning of this video that I would give you a tip which most salaried people might miss claiming. The thing is, under section 80 CCD 1B, you could get an extra deduction of 50,000. We know that under section 80C, we have seen, right, EPF, PPF, tuition fees, home loan principal prepayment, all those things. Collectively, maximum they could give a deduction of 1.5 lakh only. But you could, if you had invested in 80 CCB 1B, means if you think that your 1.5 lakh limit has already been exhausted, means you have utilized it, but you can make some more investments in that year to save your tax, then the best investment would be this thing under 80 CCD 1B, because here you could get another 50,000 extra deduction. It's over and above, right? It's over and above 1.5 lakh limit. What is this? This is an NPS scheme. It's nothing but National Pension Scheme. This one investment, it could save you around 50,000 tax in a year. if you are in a 30% tax bracket, 30%, 20%, I'll come up with another video explaining these slab rates for different tax regimes. Consider investing in this NPS, National Pension System or scheme. It's a separate from ATC, additional to the 1.5 lakh limit. It's available under old tax regime. I'll come up with another video clarifying everything about the old tax regime, new tax regime, who should opt for what. I'll try to make another video on that. Yes, most people know the 1.5 lakh limit of ATC, but only few know about this. So you have known by watching this video, right? You can open an NPS account on the NSTL or any other pension website like HDFC pension website also. It's a very few minutes task. Yes, I have also promised that I'll discuss about this home loan, means interesting. 1 minute. Interest portion of installment. We know that principal repayment could claim max 1,50,000 under section ATC. It's a part of overall ATC. So on home loan interest, you can claim up to maximum 2 lakh max if it is a self-occupied property, right? So combinedly, you could claim 3,50,000 per year. This is a massive thing, not a small amount. This is available under old tax regime. So with both of these, you could claim around 3,50,000 per year. So this is why I say a home loan is also called a tax planning tool. You can plan your tax, you can plan your wealth, fixed assets. Yes, let me quickly summarize this. Thank you for being in the video till the end. We have covered the standard deduction. We have covered about the ATC, all these deductions, 1,50,000. There are some more we'll cover. Could not complete all these things in a single video. We'll do another thing also. HR rate varies from person to person based on their basic and the place of location of their work. Then the health insurance maximum 75,000, and the NPS, the most important thing, 50,000. Home loan 2 lakhs. So you could potential tax income you could reduce by 4 to 5 lakh. Means reducing tax up to 4 to 5 lakh means saving around 50 to 1 lakh in your tax, right? Thank you all. I am going to wind up. Please do like this video, share, subscribe with you so that I could get interest, and I'll also post videos regularly on this content. Thank you all. Thank you so much. I'm planning for next video on new versus old tax regime, which is better for your salary. Thank you. See you in my next video.